Okay, so far we have seen how to compute goodwill, but I would like to ask to go way further. You know, when you get
Okay.
goodwill computed from consolidation, should always be tested for impairment, right?
Okay.
You could have the impairment losses of what? So today you're going to learn how to get them to compute the impairment loss of what? Of goodwill.
Goodwill.
Yes, we're going to get that. You're going
Okay.
to do the impairment loss of goodwill. So maybe you just need to get ready for that. And
Okay.
I think I'll just explain it right away. It's just simple. It's a simple matter. Let us go to
Okay.
write a sheet here and write impairment
Okay.
of what? Of
Loss of
goodwill.
good.
Yes.
Loss of goodwill.
Just like that. Yes, impairment loss of goodwill. How do we get the impairment loss of goodwill? How do we do? How do we go about getting that? It's simple. Like we
Okay.
said on I-36 impairment, we usually compare the carrying amount against the recoverable what? Amount.
Recoverable amount.
When the carrying amount is higher than the recoverable, you get the impairment loss. Else, no impairment.
Yes.
Right? Yes. So first
Yes.
of all, you need to
Yes.
know how to get the carrying amount.
Carrying amount.
Yes. So just say the carrying amount. And how do we get the carrying amount now? On the carrying amount, you would have two things which you need to be aware
Okay.
of to deal with two things. And what are they? First of all, is you're going to do with all of the subsidiaries. So they would give you the net assets for the subsidiary. The net what? Net
Net
asset,
asset.
which of course would be the equity of the subsidiary plus you and plus
Okay.
existing goodwill. It's existing what?
Goodwill.
Goodwill. You get the carrying amount there. After getting the carrying amount, you have to
Okay.
recover what?
Recoverable amount.
Yes, recoverable amount. Now, if there are things to deal with, of course, just writing this, I think I wouldn't even have needed to do all this. The most important point here is it depends on the nature of the. Okay, it will depend on the nature of the goodwill you're going to compute, right? It could
Okay.
either be full goodwill or partial goodwill.
Yes, sir.
Yes. Now, in case it is the full what? Goodwill,
For
if you
goodwill.
remember, if you have full goodwill, which is the goodwill related to both parent interest and non-controlling interest, its impairment loss would also be full. If it's the partial,
Okay.
its impairment loss would also be what? Partial. So that's the main thing here.
Partial.
So by full goodwill, it means
Okay.
it's 100% goodwill. It does not only deal with the parent interest, right?
Okay.
Yes. So in that case, it is usually simple. You just add and you'll be done, right?
Yes.
Now, suppose you are going to deal with the partial goodwill. That's where the problem comes. Partial
Okay.
partial goodwill. Which I told you the NCI would be measured by which method? How would you get the NCI? For partial goodwill, how would you measure your NCI? Hello?
Like the one that we did. Yes, sir. Like the one that we did
Now I need
on question 3.
yes. So just like I told you,
Not a proportion.
yeah, the partial will be the proportional one, right? The partial
Yes, sir.
that would be the partial. Take your proportion and go away. But for the full goodwill, it means everything is accounted for. It is 100%. So you can see the issue here now, right?
Yes, sir.
Yes. Now you have to note this. In case you are dealing with a partial goodwill, remember the recovery amount is 100%. Net assets is all of net assets 100% too. So you'd only remain with the goodwill. Goodwill maybe it's 80% or 60%. So you'd have to presume that you can just write here the notional what? Notional goodwill or unrecognized goodwill. You're forced to put something which wasn't there, right?
Okay.
So you're going to force and put it here. You do it this way. It's simple. Let's say the existing good. I'm just presuming now, right? Let's say the existing goodwill is
Okay.
600. Let's maybe it's 6,000. This is the existing goodwill, and maybe this is only 70%. I'm presuming. So you divide by 70 per what?
Okay.
Percent, and then
Percent.
go and multiply by the remaining percent, because this 6,000 is already 70%. So I'm trying to ask myself, what would be the goodwill at 100 at the remaining goodwill of 30%? So you divide by the existing percentage is 70, and you multiply by
Okay.
the remaining percentage is what? 30. This one would be the
30%.
which was not recognized. So you just do that, right? You take
Okay.
them together here and they would get your impairment loss. And there would be a way. Now you have to note one thing. On partial goodwill, let's say you have computed your impairment loss and maybe it is 100. Right. Remember, you forced your goodwill to be full goodwill by adding the goodwill that wasn't existent. The goodwill that was relating to the non-controlling interest, which we said on partial goodwill doesn't exist. Right.
Yes.
So you're going to break it down to break down that impairment loss into parent interest again by the percent and then non-controlling interest. But that for non-controlling interest, we are going to discard it because it will be relating to this notional goodwill, which we just said it is notional. It doesn't exist. So just let it be, right? While when you're dealing with full goodwill, when you break
Okay.
it down to parent interest and non-controlling interest, both components would work out fine. I think let's go and do the question. Okay, let's look at this question here. What does it say? It says, question number 4, A owns 80% of B. So
A
A is the parent and B is the what? Subsidiary, right?
subsidiary.
Okay, at 31st
Yes.
October 2026, the carrying amount of B's net assets, which is a subsidiary, is 65 million, excluding
5
goods
million.
that arose on the original acquisition. The recoverable amount of the net assets of B is 67,000 what? Million. Okay, calculate
Million.
the loss now. You need the impairment what? Loss. Calculate the impairment loss.
Loss.
Roman 1. NCI at the acquisition was measured at fair value. If goodwill on acquisition was $8 million, you see. So the first NCI was at fair what? Value. Is it a full
Fair
goodwill
value.
or partial goodwill? Is it a full goodwill or partial goodwill?
It's a partial.
Why are you saying it's a partial? Why?
It's only for NC.
Hmm?
It's only for NCI. It's not for parent.
Really? Why are you saying it's only for NCI? There is no goodwill for NCI, my friend. Goodwill is you can't say parent is the one who pays. You can't say it's for NCI. Goodwill is either for parent interest only or for both parent interest and non-controlling interest. You see,
Okay.
that's why you have full
Okay.
goodwill and the partial. When you are told full, it means it covers both parent interest and non-controlling interest. When you are told the partial, it is because it only covers parent interest. You get the point?
Okay. Okay.
Yes.
Yes, sir. Yes, I'm getting you now.
Okay. And now, like the word fair itself says, if it is fair, it means it is fair. It covers both, right? Parent interest and non-controlling.
Okay.
This is when
Non-control. Yes.
NCI is measured at fair what? Value, right?
Fair value. Okay.
Yes.
Okay, sir.
And here, for parent interest, right? We just say that okay, this only covers this. This is when non-controlling interest is measured as a proportion of net assets. A proportion, not complete, right?
Proportion.
Yes. So,
Yes.
now this is what. Let's try to do this question here, right?
Yes.
Okay. So, the first question says NCI at acquisition was measured at fair what? Fair value.
Fair value.
Fair value means full goodwill. right?
Okay.
Favorable means full goodwill. So, okay, I would say, okay, let me say, okay, it was at full goodwill. So, for full goodwill, you have no issue because full goodwill it means it is 100%. So, I would come to net assets, carrying amount of net assets was 65 million, right? I would come here on full
Yes.
net assets. I would say it's 65 million, and then
65 million.
yes, I would have to add my what? My goodwill, right? Goodwill,
Goodwill.
how much?
Yes. 8 million.
Great, 8 million. So I'll just come here and say plus 8, and I would have 73 there, right?
Yes.
Okay, now we compare with the recoverable amount. What amount would we recover? 67, yeah?
67. Yes.
Okay, so I would say 67. And what would be the impairment loss? Impairment loss.
20. That's a minute.
Is there an impairment loss or not?
No.
Why are you saying no? I don't know why you're saying no. When does impairment,
Carrying amount 73. Recovering amount 67.
why are you saying no then?
So just a minute. 73 minus 67.
Listen, we say impairment loss is not just a difference. You have to know whether there is an impairment loss or not. When does the impairment loss exist? If you can remind me.
When the carrying, yes, when if I can go back to the impairment, when the carrying amount in our books is lower than the recoverable
No,
amount.
no, 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 that's not true. No, that's not true. Listen, when you're doing these things, try to bring the normal sense. We are speaking of impairment. An asset being impaired, it means you have held it at an amount that you cannot obtain, you cannot recover. In the books, you have something at 100 million, but even when you sell or use, you can get less than that figure. That's when we say an asset is impaired. It is like impairment is like you have overstated an asset. In the book, it is much more. Now you are saying that it is when the carrying amount is lower. If the carrying amount is lower than what you can recover, is that really an impairment? Let's just take it to the normal life, right? In
Yes,
the
yes,
just
right.
that's why I
Yes,
shall tell
yes.
you, just try to take things into normal perspective, practical perspective. In your books, you have the figure 20, but you can get 50. Is that impaired? It is not. It is
Mm,
not impaired. Impaired, it means something
it's
has lost.
not.
Impairment, by impairment we mean that something has actually lost its ability to generate something, but you are holding it too high. That's the meaning of impairment. You get my
Mm.
point? Yes. That's the meaning of what?
Yes, sir. Yes, sir.
Yes.
Impairment.
That's the meaning of impairment. By impairment, you mean, okay, in the books, you're holding something at 50,000, but you can only get 20, you can only recover 20. That is impaired. You have to reduce its figure. That's the
Yes.
essence, the normal essence. So try to, I know it's the beginning, it's normal. This is normal, right? I know that you can say
Yes, sir.
that because maybe you haven't taken things into more perspective. You have a lot of things to deal with and work in that. But when you go and do revise and revise, you ask yourself, right? You know, by
Yes, sir.
impairment, it's like you are trying to discredit. Okay, why you are trying to justify? Why am I recording this figure in the books at 73? In the books, it's 73, but I can only recover 67. Oh, what does this mean? In real life, I can only get 60. Recoverable is in the real life,
67.
right? In real life, I can get
Yes, sir.
67, but in paper, I've written 73. Is it normal? It's not normal. Reduce it. That's why you call impairment.
Loss. Okay. Yes, sir.
Yes.
Yes, sir. No, you are very right. Yes.
Okay. So here we say we
So we
have
have a loss of
uh
6.
a loss of 6. So it's 73 minus how much?
Yes.
Minus 67.
67.
Okay, impairment loss of 6. Great. And that's what we are after.
Yes, sir.
But maybe we should go more deeper and deeper, right? Since we'll
Yes,
be
sir.
having the impairment loss now, on computation of goodwill there, you could deduct impairment loss, right?
Yes.
Maybe let's just pass the normal entries. Presume this is impairment loss during the period. What would you have done? It is impairment loss of goodwill, right? So obviously my goodwill will have to be lowered. So I would say credit what? Goodwill. Goodwill is an asset. So
Goodwill.
I'm reducing it by 6, right?
Okay.
Remove goodwill by how much?
By
Reduce by
6.
6. And then I'm going to debit somewhere. Let's go now.
Profit or loss?
Great. So I'm going to debit statement of profit or loss by what again? By 6.
By 6.
Yes. Now, to make it much better and better, you in consolidation, you usually have to split the figures between the parent interest and the non-controlling what? Interest. That's what
Interest.
from now onwards, you have to get that right. And
Okay.
so in lieu of that, you could do this, right? It is right that you could say it goes to no profit or loss, it's fine. But sometimes at the end, maybe preparing the income statement, down there you would have to maybe I've got a profit of 120. You have to say maybe 90 relates to current interest and the 30 relates to non-controlling what? Interest. So I'm trying to
Interest.
say that portion when it will reach time, you have to split that profit, non-controlling interest and current interest, right? And so I'm doing.
Yes.
So on the profit or loss, when you break down the portion related to current interest, and there is another portion related to non-controlling what? Interest.
Interest.
You get the point here.
Yes, sir.
So this is what to do. When you speak of the look, this is full what? Goodwill. Full goodwill, it means it relates to both current interest and non-controlling.
There you've gone.
Okay, is it fine now?
Yes, now it's okay.
So you have to deal with this. When it is full goodwill, you have to break it down into parent interest and non-controlling interest, right? So as for
Okay.
non-controlling interest, we know that non-controlling interest was how much percent? Let's go to the question. We are told A owns 80% of B. So what is the percent of
Yes.
20%, right?
Please, 20. Yes.
So if B is 20, I would just come and say, okay, I'm going to take for non-controlling interest, right? Non-controlling
Yes.
20% times 6, right? And you'll get one
Yes, sir.
there. And for parent interest now, parent interest is 8 per what? Percent.
80%.
So I would say 80% times that again, times 6, and I would get this.
6.
So you need to know how to break this down, right?
Okay. Yes,
Yes.
sir.
Okay, now let's go to the partial goodwill. Let's go to the partial goodwill. Roman 2 says the non-controlling interest at acquisition was now measured at its proportion of the fair value of what? Of the subsidiaries identifiable net. If the goodwill at acquisition was how much now? Was 10.
10 million.
This is what we shouldn't expect, right? We expect the goodwill, if NCI was at proportion, the goodwill to be less because at fair value, the goodwill is related to both parent interest and non-controlling interest. So we expect it to be more, right? While for
Yeah.
portion we expect it to be less. But this was just a question, so it's no big deal. But for that sake, I want to change it, right? Instead of putting
Okay.
6, maybe let's say the goodwill was 4. What goodwill was how much?
6.
Okay, we could put
You
it.
are writing 6, sir.
Let me write. Maybe let's presume maybe it was 4, for example. It was how much? It was 4 million.
4.
It's 4 million.
Okay.
Okay, so if you do that, uh, let's just go here. So now we'll be dealing with the part of goodwill, right? We have carrying amount.
Yes.
It was 65 plus the goodwill. So I would also say here it was carrying amount of 65 as usual. I would add the goodwill. The
Yes.
goodwill is 4. So
Yes.
69. Okay. What about the notional goodwill now? About the notional goodwill now, we'll do it this way, like I told you. Remember, we have a goodwill of 4. A goodwill of how much? 4. million.
Oh, 4.
That good this is a partial goodwill. So that goodwill is only how much percent? It is 8%. Right, because I told you the partial goodwill, when you measure NCI as a proportion of fair value of net assets, right?
Yes.
That goodwill is only related to the parent interest, and the parent interest is only 8%. So you
80%.
take the 4 and you divide by the 8% to get the 1%, and then you multiply by the remaining percent. So I could divide by
20.
80 and multiply by what?
20.
No need percent, because the percent would be on 8 and on 20, and I would cancel out, right?
Okay.
So I'll get 1 there, right?
Okay.
By getting 1, I would say, okay, now I could get the 2. So 69 plus 1 here. Okay, recovery amount, it is the same. It was 67.
67.
Yes, 67. So the same figure. And we can get the impairment loss again.
Yes.
Impairment loss.
Loss.
There.
70 minus 63.
So it should be
63.
3.
70. Now 69 plus 1, 70. Then minus 67.
Okay, great. That's good. So, like you said, we have 3. So 3 will be our impairment loss. Right.
Loss.
Yes.
Yes.
And for this impairment loss, now we'd have to break it down again. Remember, this impairment loss in part comes from this notion of goodwill, which wasn't there, right? So we
Okay.
break it down like we did here, but now not just like this. You know, this one, it was right to have the parent interest and non-controlling interest, but here now, these 3 already include the 70% and the 30% in one here. You see the problem now.
Okay. Okay. Yes, sir.
Yes, and you know, I think there is something wrong here. Okay, it's not wrong. It's just that, you know, there are decimals.
This
I don't.
60,000 needs to be 4.
It was for, you know. Okay, it's okay. It's fine. You know. Okay. This was just a sample before, right?
Yes, sir.
Yes. Yes. Okay. So I would just come and say this impairment loss is not real. Let's get the real impairment loss. The real what? The real impairment loss here is only attributable to the parent interest. That is the reality.
Okay.
Which we get it as how much? We have the 3, and then we have to multiply by what? By the parent interest percentage, which is 80 per what? Percent. So 3 times 80%, how much do we get? So just take our 3, and then I would multiply by 80 per what? Percent. And I would get 2.4. You see now? I hope you get
Okay.
2.4.
Why are we? No, I have not. Why are we using the real, our real as a parent here?
I know I didn't get you. What did you say?
The last, the 3 times 80. The one that I don't understand why you did
Look
that.
here, we got the impairment loss of 6 here, right?
Yes, sir.
We
Yes, sir.
said 6 times 80%, and we got this. And then 6
Okay.
times 20%, and we got this.
Yes, sir.
That's what we are doing it here again. But the problem is, remember, when you have the partial goodwill is actually only related to the parent, not to the non-controlling interest. But when solving,
Okay.
look at how we got your impairment loss. We had to involve something which was non-existent. You see this one? It shouldn't have
Yes, yes, sir.
it shouldn't have been there from the first place, but we put it.
Okay.
So since we put the wrong thing, we are going to correct, and I'll show you why we did the wrong thing. It's because the cover amount is on 100%, carrying amount is on all 100% again, but only goodwill was on 80%. So it would not be right to compare something that is less than 100% to those with 100%. That's why it's kind of, we tried to inflate this goodwill, albeit temporarily, just so as to get the impairment loss. Remember, this loss which you come and get, you have to take the percent. So that's why after reaching here, we disregard that 20% and we only take the 80% and we get the 2.4. And even in our double entries, we're going to say this. I would say credit Goodwill. Credit what?
Goodwill.
By that figure alone, right?
Okay.
Goodwill by only 2.4. You can see the difference.
2.4.
And
Okay.
then I would go and say debit the statement of profit or loss. Statement of
Yes.
profit or what? Loss. General, just put it there. Yes. At how much? 2.4 again. You see.
2.4.
So you
Okay.
won't have the thing of non-controlling interest at all. In reality, this is what should have been done, right? You know, sometimes they also
Okay.
dislike this approach, but it is the common one being used. Look here.
Okay.
Carrying, I could have done this. Carrying amount was 69%. Wait, we could have done it this way. This way. This was carrying amount. Carrying amount was 100%. And it was what? It was how much? It was 65, right?
6.
65.
Yes.
So it's like I would have said this, I would have said, okay, 65, and then I only take my 80% because I know my goodwill is 80% only. So 65
Yes.
times 80 per what? Percent, which
Percent.
is 0.8. And then the result, I would have gone and added with the goodwill, which was 4, right?
Yes.
You see now, the goodwill was 4, so I've left my goodwill as it was, which is 4. I left it at 80%. So I changed the carrying amount, the net asset to 80% too. This notion of goodwill, no need now. I go directly to the recoverable amount, which was 67, right? So
Okay.
I say again 67, and then I multiply it by 80 per what? Percent. I get
Percent.
that. You see, after getting that, let's look at the impairment loss we're going to get. So our impairment loss would be how much? Would be this one
Minus.
minus this one, right?
Yes.
16, wait, 5. You see, you got the 2.4 direct. You see,
Okay.
2.4, but initially we had 3 and
Yes.
we had to undo.
I think this one, the second one is much better.
It's much better
It's a
because,
straightforward.
yes, it's straightforward. But you know, sometimes I also
Yes.
want, I don't know why in the books they use this one, but I think the second one is better because you see that, okay,
Yes.
my goodwill is not at 100%. So let me also change. Since my net assets and the recoverable amount at 100%, let me change them to 80 so that I get directly the figure that I need. And this one will directly be related to the parent what? Interest. But
Interest. Yes.
if you,
This
if
one
you
is very straightforward.
if you use this one, you can forget and you can say, oh, I forgot and maybe I used the remain. 3 minus 2.4 equals to 0.6. You may find yourself debiting 0.6 again to NCI just like we did here.
Yes.
Yes, so that's
Yes.
all.
So the second one is okay.
Yes, of course, I believe too. If you are comfortable with that, I think it should be fine. It's like what? Let's just try to go back up here. It was consideration number 1. You could see something. You see also here when you are comparing goodwill at acquisition on that question.
So you've gone.
I'm saying that. Let's go back on computation of goodwill, right? Is at a by
Yes.
proportionate method. You could see you could also have another method here because you can see the purchase consideration was how much. Let's just kind of repeat it here. We had the purchase
Okay.
consideration free, it's fine. NCI now. You can see NCI this way we just took 40% of the net assets. And we have our net assets down here. You see, these are our net assets. And then we took 40% of the net assets. So it's like we are also repeating the same thing. Right.
Okay. Yes.
For proportionate, we could have just said, okay, I have my purchase consideration at 443. I don't add NCI at all. I don't add what? NCI. So I would have
And
just
yeah.
on fair value of net assets, which was 60, fair value of net assets was 290, right?
Yes.
I would have just taken 60%. I would have just multiplied by 60 per what?
Percent.
And if you also do it, you would have found the same thing. You see, 269, 418, just like here. But for Goodwill now, we have to do this because you'll have the separate working for non-controlling interest, for computing non-controlling what? Interest. So
Interest.
we're going to compute the non-controlling interest alone. It means you would have to start from the NCI at acquisition. So even if you skip it now, you're going to get it. And that's why we just
Okay.
this way. Yes.
Okay.
But that's an alternative. Okay, I think now from this moment, so right now you study, right now, no hurry. Eh?
Yes.
No hurry. If you just feel tired, you say, "Ah, okay, I feel tired now. Let's. These are the workings now. We have seen working one, which was group structure.
You are low?
Working one, still low.
Yes, you are low.
Am I still low? Still low.
Yes, you're still very low.
Hello?
Yes, now I can hear you.
Okay, so you can see that now we need to get the non-controlling interest. It has reached a time that we have to break down the equity into our two components, the non-controlling interest and the parent interest. That is the aim, right?
Okay.
So
Yes, sir.
the working for non-controlling interest is usually like this. First of all, you would be having the NCI at acquisition. Remember, you would have computed Goodwill, and at Goodwill you have NCI. So that's why you say, okay, we have NCI. We take it where? We take it here on NCI at what? Acquisition.
Acquisition.
Then NCI of post-acquisition movement in net assets. You see about this, let me explain a bit here. On working two, right? After dealing with working two, you see, you usually have a net asset at acquisition, like you have gotten for computation of goodwill,
Okay.
but also you have the net assets at the reporting date. So when you take the difference between these two, this one minus this one, right? You get the difference. And that difference is now broken down. Partly you multiply by the percentage, right? If the partner
Okay.
is 60%, then you take 60% of that figure and you take it to the group reserves, group equity, I mean,
Okay.
and the remaining, that is 40%, is taken to non-controlling what? Interest.
Interest.
Like that, yes. Get the point. So that's what we have to deal with here. So
Okay.
NCI percentage of post-acquisition reserves, you see, it is taken to, you take the maybe percent and that figure, you get it there, and you can see down here, look here. You see on group reserves. Group reserves, as for the group reserves, you would have to substantiate everything. Maybe it could have retained earnings and other items, right?
Okay.
You could see here, look, you're told P's share of post-acquisition retained earnings. Okay, this is in associate. Let this alone, not this one. Look here, this one. Group share of post-acquisition retained earnings. This is also just like there, post-acquisition reserves. But the issue is not all reserves would be related to retained what? Earnings. So for retained
And
earnings, you put them there, and maybe if you have the remaining which go to other components of equity, you'd also take them here. You can see here. Fees share of post-acquisition, other components of what? Of equity. So it is the same thing. All these come from working number what? Number two. Right.
number two.
Yes.
Okay.
Working number two, you can see here. Working number two, you can see maybe you have other components of equity and maybe you have retained earnings and what. So for those things related to retained earnings, would go to retained earnings. For those not retained earnings, would go to other components of what? Of
Of
equity.
equity.
That's what we're just trying to say. So nothing much.
Okay.
And on non-controlling interest, maybe you could have something else. Non-controlling interest of goodwill impairment. You see this? We're just doing.
Yes, we're doing it.
If you fair value method only, for fair value method what? Only. Remember, Goodwill method to be partial or full depends on the method you use to compute the non-controlling interest, like I said, right?
Yes.
If the non-controlling interest was computed using the proportionate method, it means all of the goodwill would be attributable to the parent. So nothing would be observed on non-controlling interest here. Everything would go to group what? Retained earnings.
Retain.
Equity.
Okay.
Yes. But now that's why you say, in case now it was the fair value, that's what would find something like, where did we do it? Yes, wait. We wrote somewhere, it was sheet, I don't know, sheet 10 or what. Yes, you can see here, full goodwill. We had some for NCI and some for what? For parent interest. You can see here, I think, right?
Yes.
While for partial goodwill, everything goes to the what? To the parent
The
interest.
parent.
Yes,
Okay.
so that's why you have this. After this, I think everything else won't be an issue. You just go on.
Okay.
And here you can also see, you see, now when you go to the group reserves now, right? You see, you can have this one. I'm looking for the goodwill impairment. You see, goodwill what? Impairment.
Impairment.
Impairment, of course, it doesn't matter whether it's a full goodwill method or partial goodwill, everything would come. Goodwill would always come here. But if it is a partial goodwill, it means it will come in full. But if it was a full goodwill, it means some would go to non-controlling interest and some would come to this group reserves and retain the earnings, right? This is
Okay.
what I say here. Yes, and what remains here, I think, are usually just the normal things. Gain on bargain purchase, which we call negative goodwill. When you compute goodwill and it is
Yes.
negative, it means that it is the gain to the parent. So that's why it comes to the group. It is not shared. It comes to the group as a
Okay.
gain, like you see it here, and also goes to the statement of profit or loss. Professional cost on acquisition. We said, of course, professional costs are not part of computing goodwill, so they are taken to profit or loss, right? So if taken
Yes.
to loss, they would obviously come to retain the earnings too. Also, provision for unrealized the profit if parent was the seller. Of course, we're going to say this, right? You know, if the parent sells, and we spoke of provision for unrealized what? Unrealized the profit. You have
Rise the profit.
someone and maybe in the same group, and at the end of the period, those goods have not been sold out of the group. If the parent sells, it means it got the profit, which is wrong. So it has to eliminate that profit. And that's why you would put the provision for unrealized the profit here. If it's a subsidiary that sold, it means that profit would have to be eliminated from the equity of the subsidiary, right? And that's why in that case, you know, these net assets are the equities of a subsidiary. So that's why you'd have to remove the provision for unrealized the profit here in the books of the subsidiary. But I think no problem. You're going
Okay.
Yes, you're going to see that. Right now, you just need to know there is something of that kind. So I think whatever remains, we'll also see how to deal with impairment associates, right? But now, if you
Okay.
have the associate, we just see that we can reduce the impairment loss of investment in your associate this year. You would see that, right? And maybe if the associate maybe
Yes.
made a certain profit, maybe had a profit of 100,000, and maybe you own 20%, you take the 20% of that, and you also take it here. You would also see it here, this one, right? As of now, of
Okay.
course, we have not gone through the associates, so there couldn't be much that you can